What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Wednesday, May 8th. All right, guys, Tesla stock here today down $6.95 per share. That's minus 3.76% in regular trading hours. Again, take after hours movement wherever it ends up here tonight. Take that with a grain of salt. Volume is bound to be low unless we were to get some wild, unexpected news or something. When volume's low in the after hours, take it with a grain of salt, whether it's in your favor or going against your bias. Let's take a look here. We're going to take a look at the volume profile, kind of look under the hood at whatever bias we can pull. The psychological levels, big money's looking at it, so we need to by default. We'll finish up with implied volatility, expected move, and the directional bias coming out of the chain. All right, let's start here on the 5-minute chart with that volume profile analysis. Again, peeling back the onion, taking a look under the hood, pulling out any bias that we can. The move itself is done, so we might as well get a better understanding of what happened. Listen, by the way, if you're new here, welcome, first of all. Tesla's a daily upload. It hits every single day at 5 p.m. Eastern time. That's 1 hour after the market closes. So I appreciate you subscribing to the channel. My goal here is 10,000. I know we can hit it, but not without your help. So I appreciate it, and I'll keep the Tesla videos coming. Now, let's look from open to close and see if there's really any bias to be had here. Now, a normal open, and then volume starts to fade a little slower than normal. And then we actually see this volume hold up. 4-to-1 ratio. Arguably 5-to-1, but in the elevated, really 4-to-1, red to green. Okay, and you look here, it's a relatively aggressive sell-off off the open, or 15 minutes or so after the open. To me, with the offset that we're seeing of red and green candles, this is, first of all, out of context size, right? The volume is higher than what is normal. We typically see a really quick fade in volume on a normal day. The truth is, that's a little bit of bullish, that's a little bit of bearish bias, right? Because we're seeing some clear red bias with out of context volume. That's a higher sample size than what is typical, and it's leaning a little bit to the red side. But let's move on through the day here. Very normal. We get these little red pops. Bears, I wouldn't let these three at least excite you too much. That's too much of a risk of fooled by randomness. I'd say the same thing if they were green bars. And then as we move in, we start getting a little bit of an increase in volume here to the red side again. However, these first two bars, they're way too close, in my opinion, to being contextual bars. And it looks like you're getting a big increase because you get this one bar. Listen, if someone said, hey, I see a little bit of bearish bias there, I would be uncomfortable telling them they're wrong. I would also be uncomfortable myself assigning bearish bias, because if you actually remove this one large bar, it looks a little too contextual compared to the following volume, which happens to be green. And then moving on into the close, kind of a normal close, actually kind of a late increase in volume, which is fine. This big red bar here, don't let that one scare you. That's a rebalancing bar. Those are algorithms from funds and institutions triggering to rebalance portfolios at the end of the day. Very normal. We see that basically every day on most blue chip stocks, and it very often leads to almost no movement in the stock at all on high volume, just because there's a lot of buys and sells going through. So really all we're getting here on Tesla today is a little bit of bearish volume not long after the open. But let's move on and let's take a look at the psychological self-fulfilling prophecy levels, starting with the 30-minute chart. You can see here early this morning, we gave up both the 200 period and the 50 period. When we see breaks to the downside or the upside on off hours, okay, I don't look at it as definitive of a move as during the intraday session, because volume is almost non-existent. It is so low that early. So I like to see retests intraday, and off the open, look, we got to retest that lower level right there, right? We retested the 50 period here on the 30-minute chart, and we rejected hard on a lot of volume because it was off the open, right? So we gave up. We gave up both of those today. We retested it intraday and failed. Okay, so looking ahead to tomorrow, let's start with you bears. Two things you bears are looking for. First of all, you want to see this 50 period aggressively move downside and get closer to the current stock price to close. I hesitate to call it a gap, because I know that a lot of you are going to think a literal overnight gap, like how everyone always says the gap needs to fill. it doesn't, by the way. And when it does, it's all psychology, right? Because you get, it lines up exactly with what we're always talking about here. You want to leave nothing unsaid, untested, right? So bears, understand in the bulls' minds, when they're looking at this, they're looking at that and saying, okay, there's a lot of room and not really a lot of hang up. I'm okay staying long. That's what a lot of bulls, that's going to be the psychology in a lot of bulls' heads. So bears, your goal is to try to discourage that. Right? And bulls, I'll get to you in 1 second here. But it's important for you bulls to understand the psychology of the bears as well. So bears, how do you start to kind of put that out of bulls' heads? Well, you want this 50 period closing that quote-unquote gap. Right? Closing that up, getting that potential psychological area of resistance closer to this lower stock price. All right. Number 2 that you're looking for, bears. If we see a retest of the 50 period, you want to see that reject on high volume. Treat that as resistance. Now, bulls, number 1 thing we're looking for here. Currently, the stock price is about 2.5%, 2.6%-ish away to the upside, to that 50 period moving average on the 30 minute. That will likely be less tomorrow as we see this 50 period come lower. So, it might be anywhere from 1% to 2% or something in that region. It's a moving average, right? So I encourage you to put it on your chart. But that's well within single day potential for Tesla. So best case scenario, bulls, is we reclaim both of those and turn them back into support same day. A good scenario would be reclaiming just the 50 period. Okay. And a not great scenario would be testing the 50 period as it comes lower and it rejects hard. Not great for bulls. That would be great for bears. All right, moving on here to the 4 hour, right? We have to look at all the time frames that are popular, that have a lot of eyes, right? For that full self-fulfilling prophecy visual. You guys notice anything on here on the 4 hour? The 4 hour is just about as in play as it will ever be. We're currently testing. First of all, ignore 177.50. We'll talk about that on the daily. Right now, just look at the things that are specific to the 4 hour, which are that 200 period and that 50 period. We are currently testing the 50 period. Like, we're on top of it right now. Bulls and bears, the 4 hour will never get more simple than it is here today. Bulls, high volume bounce away from the 4 hour, from the 50 period on the 4 hour, put some distance between the stock price and that. Now, the bears is just barely more complicated, but that's just because we're coming from above, right? Bears, high volume break downside, and then intraday, it'd be great to see a low volume retest, high volume rejection, reclaiming that as resistance. And for you bears, that could set you guys up for a downside, test in the near term of that 200 period here on the 4 hour. That's it on the 4 hour. Now, the daily is the most important. Okay, the 4 hour might be very in play, but the daily is always going to be the most important because it has the most people, institutions, it has the most money, really, watching it. Today, we broke back into the 177.50 to 180 channel. And, really what I should do, since we're talking about this so much, is I should really add just a line around like as close to 180 as possible. Okay. I think of this as one level that's happens to be kind of a very tight channel. Okay. So we broke back into that little channel here today, and we're about to break downside past the level now of 177.50. Now, this is the daily chart. It's not going to show after hours. That's okay. But bulls, best case scenario is to just get up out of this mess, which means reclaiming 180 or above. All right, just get up out of the mess as soon as possible. Bears, getting out of the mess to the downside is really your guys' goal, which means getting below 177.50 and reclaiming that area as resistance. Okay? But bears, understand that that sets you guys up for basically an immediate test of the 50-day moving average, which is currently at around 173.50. Okay, so you kind of have some more muck in the way immediately. Now, implied volatility, it's coming even lower, guys. Now, in comparison to the last few months, IV on Tesla is very low. Okay, so if you're looking at options trades that goes for both calls and puts, where you're looking to buy contracts, anywhere from, a few days out to, let's say 3 months out. I mean, look, in comparison to the last 3 months, IV is just about the lowest it's been. Okay, that means conditions, at least Vega conditions, are a little bit more favorable because when you're purchasing contracts, you're not paying up front for a lot of Vega value. Now, if IV were to continue to fall from here, you can still get IV crushed, okay? But if you're looking at equilibrium, if we were to see a bounce back toward equilibrium, then you experience IV pump, which is good when you buy contracts. Of course, being correct directionally is also necessary. But positioning yourself to benefit off of your volatility expectation, I mean, why wouldn't you do both, right? Now, expected move here on Tesla. The next expiration that we have is going to be May 10th. That's Friday. All right, so we have 3 trading days between now and then, Wednesday, Thursday, and Friday. And if we look, you know, it's not like we have earnings or anything in between there. Okay, and that's necessary to know. So the expectation by Friday's close compared to today's close is that the stock moves plus or minus $6.70 per share. Okay, now if we divide that by 3 trading days, and then once we've done that, we have to add back 50%. That's what I'm adding back in this market to make up for the fact that first number assumes 3 red days or 3 green days. That gives us an expectation or an expected move with a little bit of guesswork by tomorrow's close of plus or minus $3.35 per share. So that's the market's volatility expectation, which is very important to be aware of. But you're probably asking, what about directional bias? Well, for that, we look at volume, okay? Because that expected move by design does not price in directional bias. That's not its job. We have a little over 1.3 million total contracts traded today on Tesla, almost 785,000 calls, and almost 574,000 puts. So we're seeing a call side bias on the overall ratio. And if we break that down by time frame, the 0 to 20 delta range, the short-term speculators, we're seeing a call side bias out of them as well. 346,000 calls and about 181,500 puts. Listen, if you guys are getting value out of these daily Tesla uploads, I ask you to do one thing. It's 100% free. Takes half a second. Leave a like on the video and then get out of here and enjoy your day. I greatly appreciate it, and I'll see you in the next one.